Hello everyone, and welcome to this week's State of the Market update. So we see that the volume has dropped off here in the last few days. We're now sitting at an OTVI, Outbound Tender Volume Index value of 99.15, which means that we are roughly just under 1% less volume than we were on this time March 1st. So volumes have slid off a little bit over the last week. We have been a little bit elevated over the month of September. It's pretty traditional to see volumes come up in September and even potentially into October. Late October is kind of where we start to see the holiday volume kind of start to increase a little bit. Some of your more traditional commodities, housing start, construction materials slide off this time of year as the construction season kind of starts wrapping up and winding up. So all your lumber and raw goods and all that starts winding down a little bit. But there is a big retail push here at the end of the year that we'll be waiting on. So that being said, with volumes kind of sliding off, we have had still more significant volume than we'd had in the first part of the season as it was warming up. And I just wanted to point out that in the Outbound Tender Rejection Index for the country, I pull that up kind of year to date, we see that we're actually at this very low point of the year, almost an annual low. And I think that's probably it's probably a safe assumption to say that we have added some incremental capacity to the market. It's making things a little easier to manage in the freight networks, but also the fact that we have not had any real significant market upheavals. The Hurricane Florence effect really didn't come into play, except for regionally. It's not as big of a market as Houston and Miami. The damage was not as extensive, even though they are still recovering from the floodwaters over there. We just haven't had that big black swan event that we had in the last year. So the market has been pretty predictable thus far. That being said, I'm going to move over to our map where I have the Headall Index weekly change pulled up, just so we can identify any kind of markets that are kind of showing that first signs of instability. So the Headall Index measures the outbound volume minus the inbound volume. Any dark blue shades you see on this map mean that the outbound volume has increased at a higher rate than the inbound volume. So anytime you have more outbound than inbound in a market, you tend to have potential for capacity disruption. Any kind of market that has more outbound over time will just run out of trucks. That's where we'll end up deadheading from the markets around it. Indianapolis is the market of the week. I'm going to pull that up. So to kind of add some color to this Headall Index, we have a 70 value Headall Index currently. That is very high, especially in a market like Indianapolis. You normally, anything above about a 40 to 50 on the Headall Index means that is a tremendous outbound market, a headhaul market, if you will, where you can always count on getting a load out of it. Now, a backhaul market would be the opposite, and you would see a negative value in that Headall Index value, somewhere like Miami or one that I'm going to show you here in a minute, Phoenix. So over the last week, this thing has increased 38 points over the last week. Indianapolis has significantly jumped up. We've had a surge of volume in the Indianapolis market, and that has turned into tender rejections in Indy. Indy is quite the anomaly in the country today. I've got it highlighted here. You can see that it's jumped up about 20% over the last 8 days. Let me go ahead and pull this one back out. So yeah, you see we jumped up from about a 23% tender rejection rate to a 28% in 8 days. Pretty big jump. Indianapolis, if you got a truck moving through the area, I would recommend trying to take advantage of some higher rates in that market. Now, that's not to say that it will be in every market, but there is probably there's probably a pretty big lane sitting out there that are running out of trucks right now, just because of the fact they cannot maintain too much outbound over inbound. In the rest of the country, the LA market is kind of where we look for this time of year, because it does have its traditional peak season coming up here in the next few weeks. Retail, a bunch of containers coming off the ports, and also warehouses. And we do see that the Headall Index for LA, remember what I said about a value over 50? They've got an 88.8 right now. LA is definitely running at a very high level of Headall Index value. It has not turned into a turn down rejection rate yet, but those are creeping up slowly. And heading into the retail push, I would be very aware of what's happening in LA right now. This happened at the beginning of the year, where people were not putting trucks in the LA market early in the year, and then all of a sudden they needed trucks available. Tender rejections shot up, as well as the spot market. So one market to keep an eye on over the next coming weeks is LA. And Phoenix is kind of the satellite market for that, and that has actually gone the other direction. So they're going to have an oversupply of trucks in the area, as we see that over the last few months. Phoenix has turned into even more of a backhaul than it was before. If I'm a broker or carrier, I'm charging more money if I can to get into Phoenix, because they're probably going to be dead heading back to LA here in a few weeks. So that wraps it up for this week's State of the Market Update. I hope everybody has a great week.